Welcome to This Explainer. Today, we're diving into something absolutely wild. We're loading up what's basically a system diagnostic for late June 2026 to help you navigate the utter chaos of the modern economy. We're looking at a master key docket that maps out the territory as it actually is, right now, looking way beneath the official narratives to see where capital and power are genuinely flowing.
All right, let's look at the agenda. We're breaking this down into 4 parts. First, system error, the macro and AI trap. Second, the control grid, identity and illusion. Third, exploiting the gaps, the alpha. And finally, the tech exit, the parallel stack. Okay, let's dive right in.
Part 1. System Error, the Macro and AI Trap.
So we're starting off by looking at just how exhausted and, frankly, paralyzed the current financial market really is. Our sources paint a picture of a system that's trying to juggle 2 totally incompatible beliefs at once without actually committing to either. And think about the number 15. Out of a scale of 100, the fear and greed index has plunged to 15, hitting extreme fear. That is a massive mechanical contrarian signal. But honestly, it's bigger than that. It shows a whole generational belief system cracking wide open. You know, all those investors who were practically spoon-fed the idea that the Federal Reserve will always swoop in to save the day, yeah, they are painfully unlearning that lesson right now. The market is just exhausted, and an extreme reading like this usually happens when sellers have completely tapped themselves out, leaving a giant vacuum just waiting for a new narrative.
This tension perfectly illustrates the fracture in the whole AI trade. It's like a giant tug of war. On one side, you've got the official narrative, right? That artificial general intelligence is imminent, and it justifies hundreds of billions in immediate CapEx, or capital expenditure. But then you contrast that hype with the cold, hard math coming from inside the system itself. Sequoia Capital's memo points out that we need a staggering $600 billion annual revenue floor just to justify the current data center investments. $600 billion. And as our sources note, that revenue, it simply doesn't exist yet. Because of that gap, the smart money is quietly, almost secretly, recalibrating their valuations and moving right into defensive assets.
So here is the crucial point. 81% of the crowd intelligence on the prediction platform Polymarket is pricing in total macro paralysis. They're predicting absolutely no Federal Reserve rate cut in July. And remember, this isn't just some random internet poll. This is distributed intelligence backed by actual capital. When 81% of a prediction market agrees on something like this, it tells us the dollar is going to stay bid, risk assets are going to get seriously stressed, and this broader financial paralysis is sticking around. The system is literally trapped between sticky inflation and slowing growth.
Now let's see how this builds into an absolute absurdity. The supposed future of finance is currently throwing vastly more attention and capital at predicting the next Prime Minister of Ethiopia with over $27 million on the line than they are on the Federal Reserve rate decision, a decision that will literally impact every single asset they own. To put that into perspective, attention and capital allocation have become completely unglued from each other. It's kind of hilarious, but it's also a deeply profound signal about just how structurally fragile our current setup really is.
Moving on to Part 2, the control grid, identity, and illusion.
Our diagnostic now shifts away from market mechanics and over to systemic control. We're looking at how legacy institutions, which are dealing with failing infrastructure and outright insolvency, are trying to mask these issues by expanding surveillance and compliance grids. When we examine the capital flows, the sources show us history literally repeating itself. We are seeing the exact same dismissive political language today that we saw during the 1970s UK brain drain. While politicians downplay the situation, data from the Adam Smith Institute and the Office for Budget Responsibility are documenting massive capital flight. This is happening right after new non-dom tax rules targeted wealthy foreign residents in the UK. The actual money flowing out has completely blown past the Treasury's estimates, which just proves a simple rule. Capital moves rationally, no matter what the political rhetoric says.
When you take this dense, highly hedged, bureaucratic language from Fed Chair Jerome Powell and place it right next to the raw market realities we just talked about, it perfectly highlights the uncanny valley of modern economic theater. We've got central banks totally trapped in a loop of high rates and inflation, issuing these deeply institutional, cautious statements. Meanwhile, the underlying economy, and, the actual people just trying to survive it, are facing completely different, wildly volatile realities on the ground.
And that brings us to a really fascinating concept outlined in the sources, the tax illusion. They define this emerging digital panopticon not as some grand, shadowy conspiracy, but simply as a systemic incentive. Think about it. When a government maxes out its ability to raise traditional taxes without sparking a political meltdown, what does it do? It pivots. It transitions to demanding digital compliance. Unified IDs, transaction monitoring, social compliance, these suddenly become the new cost of just participating in society. It's a shift from control through taxation to control through absolute transparency.
All right, part 3, exploiting the gaps, the alpha.
So how do we actually navigate this mess? Whether you're an ambitious 20-something in London or just someone trying to wrap your head around this new world, the sources reveal exactly where the smart money is quietly moving while everyone else is panicking and doom-scrolling. The biggest key? Dodge the AI hype trap entirely. Instead, you want to focus on highly profitable, unglamorous avenues that exploit the gaps of a failing system. We're talking about taking advantage of high UK short-term savings rates. We're talking about unglamorous value, like plumbers and tradespeople pulling in £300 an hour simply because nobody wants to do physical work anymore. Over in tech, it means not trying to build a new AI model to compete with the giants, but instead building the B2B workflow integrations that help existing businesses actually use these new tools. It's about utilizing cheap debt if you can lock in a rate below actual inflation. And finally, monetizing niche attention, because having an engaged audience is massive leverage right now.
The absolute ultimate takeaway here is a fundamental rule of finance. The market transfers wealth from the emotional to the rational. Period. It brutally punishes the people who blindly chase the hype and then panic sell when things drop. On the flip side, it generously rewards the folks who just sit out the frenzy, stay calm, and patiently buy up the boring, cash-flowing assets when the systems inevitably crash.
Which leads us to our final section, Part 4, the tech exit, the parallel stack.
Finally, let's download the patch for building completely outside the legacy operating system. Because look, this isn't about reforming the old structure. It's about engineering a brand new one. If the traditional tech stack, Google, Meta, Amazon, Apple, is completely owned and all the exits are already taken, we have to ask ourselves a really tough question. How do you actually escape a closed system? Competing with them on their own turf is a guaranteed losing game. So what's the alternative when the network effects are totally locked in?
To figure out that exit, we look to the framework of the network state, a concept developed by Balaji Srinivasan. Basically, a network state is a highly aligned online community that has the capacity for collective action, and eventually it crowdfunds physical territory. Having this philosophical vocabulary is a real game changer. It provides the exact conceptual architecture we need to understand how we can build parallel, highly resilient systems that just do not rely on legacy geographic or corporate monopolies.
And I want to be clear, these aren't just abstract pie-in-the-sky theories. These are 3 concrete engineering steps happening in the real world right now that let you opt out of the centralized grid. Step 1, deploying decentralized physical infrastructure. Think of things like the Helium network for off-grid connectivity. Step 2, utilizing mesh networks, like Althea, for completely independent internet routing. And Step 3, adopting anti-ID hardware and hardened privacy operating systems, things like Graphene OS and the Nitrophone, which literally strip away biometric and location tracking data entirely.
When we compare the two, the trajectory is pretty obvious. The legacy stack is centralized, it's highly fragile, getting increasingly expensive, and it's heavily monitored by the state. But the parallel stack, the one being built in the gaps, it's distributed, it's constantly getting cheaper, it's incredibly resilient, and best of all, it's entirely user-controlled. Ultimately, it's simply a matter of capital flows. The sources make a strong argument that eventually this distributed alternative will just become the default, and the centralized system is going to be left behind as a legacy relic.
For those of you really paying attention, this philosophy is your master key. Stop playing the game by the old broken rules. Don't ask the system for permission. Don't try to get acquired by the incumbents or scale inside their outdated playbook. Instead, start building in the gaps. Build the parallel system that makes their old playbook completely irrelevant.
We've seen the fragility of the macro environment, the illusion of the control grid, and the incredible alpha just waiting to be claimed in the parallel stack. So I'm going to leave you with this one question to chew on. Are you going to keep feeding the legacy machine, just hoping the old rules will magically start working again? Or will you use this intelligence to step outside the illusion and write your own source code? The choice, and the massive opportunity that comes with it, is entirely yours. Thanks so much for joining me on this explainer, and I'll catch you next time.